Hey everybody, we are going to talk about some growth stocks. Normally whenever Tyler is on the channel with me, we're generally value investors, but we're going to talk about some stocks that we think have a lot of growth potential and are really impressive right now. Before we dive in, please take a minute and check out fool.com/Frankel, the link you see on your screen. It's the best way to support this work we're doing on YouTube. You can get the top 10 stocks to buy right now from the Motley Fool. Again, fool.com/Frankel. So again, we're going to talk about some growth stocks. And we're kind of doing a little bit of role reversal here because I'm going to talk about a stock that I've never discussed on my channel, and Tyler's going to talk about one that he has. So that doesn't happen every day. So I'll go first with that. The one I want to talk about, and I know it's one that Tyler's not too familiar with, so hopefully I'm going to sell him on a stock that he doesn't. This role reversal thing is crazy today. Mine is C Limited. Ticker symbol is SE. It's one that I kind of bought a year and a half ago as kind of a deep value play. It's one of the stocks that was one of the biggest beneficiaries in the COVID years of 2021 when everybody had no choice but to buy things at home and use digital finance apps and play video games, things like that. C Limited has stakes in all three of those things. So this is already one of the best performing stocks in my portfolio recently. It's up 160% in 2024. It's one of the when I looked at how my portfolio did, it's by far my biggest winner of the year. And the reason is they went from being wildly unprofitable and hemorrhaging billions of dollars to being a profitable company again and returning all three of its business segments to growth, which was a lot of experts thought they wouldn't be able to do. So real quick, if you're not familiar, there are three sides to this business. The oldest one is their digital entertainment business, which is gaming. It's a mobile gaming platform called Garena. You might be familiar with a video game called Free Fire. It's not popular in the U.S. as much, but it's the most downloaded video game globally in the world right now. The most downloaded mobile game, I should say, and that's a product of a C Limited product. There's also an e-commerce platform that's called Shopee, SHOPEE. Think of it as like the Southeast Asian version of Amazon. They're based in Southeast Asia, by the way, like Singapore, that area. And there's also a digital finance platform called C Money, which is kind of the payment processing. So they're like an Electronic Arts, an Amazon, and a PayPal of their neck of the woods. So recently, all three of these businesses have been impressive. Go ahead, Tyler.
Well, I was gonna say, if you tell me that you're lumping Electronic Arts, Amazon, and PayPal all into the exact same company, you look at like the performance of those companies like since inception, it's like, holy crap, I can get all these companies in one?
Well, I mean, C Limited's a big company. You don't realize it because it's not really. I mean, for obvious reasons, it's not a household name in the U.S. They don't have any, U.S. based, consumer facing products. So it's not, but this is a big company. I want to say the market cap's in the $100 billion ballpark right now. Like, it's not a tiny business. But all three parts of the business are doing well. We'll start with e-commerce because that's, in my opinion, the most promising. Merchandise volume is up 25% year over year after a very big post-pandemic low. Revenue was up 45% in that area of the business. Their take rate's growing, so they're making more money off each transaction. And that part of the business has been the least profitable, and it achieved adjusted EBITDA profitability for the first time in the most recent quarter, which is nice to see and definitely encouraging for analysts. On the digital finance side, the C Money platform, they have $4.6 billion of outstanding loans. That's up 70% year over year. Their revenue grew by 38%. I have 24 million total borrowers, and not only did their non-performing loans, their credit quality, not only is it stable, but it actually is improving quarter over quarter for the past couple. So that's good to see. And last but certainly not least, that gaming business, digital entertainment. I said Free Fire is the most downloaded game globally. They have 628 million quarterly active users in this platform. Big reach. Over 100 million of those are daily active users. 8% of that entire user base are paying users. Like most video gaming platforms, there's a free version and in-app purchases and things like that. That's up 25% year over year. in terms of the active users, and bookings, which is kind of the gaming version of just revenue. You know, they don't recognize you buy credits for these games, and then as you spend them, it gets recognized as revenue. But bookings is the best indicator of current revenue. That's up 25% year over year. And all three of these are profitable. The gaming is still the biggest part of the profit. It accounted for 65% of Sea Limited's operating income in the most recent quarter. But just overall, revenue up 30% year over year, gross profits up 36%. Their bottom line net income, not adjusted, this is GAAP net income, went from negative 144 million to a positive 153 million in the most recent quarter. A lot of room for margin expansion there. Their adjusted EBITDA margin is now at about 12%, which it was negative. And they have about $10 billion of cash on the balance sheet. And just to correct myself, they're about a $50 billion market cap company. So if you look at just like the price to sales, it's still historically low. They just turned profitable, a lot of room for expansion. I think this is one of the best investments of the year, even after that gain in 2024. Tyler, what are you looking at?
Well, to throw an even like, hey, are we in the upside down or the bizarro world? The stock I want to talk about has a trailing PE ratio of 254 times. So not something that you normally see me talking
Role
about.
reversal.
But yeah, so I'm talking about BBB Foods. Ticker is TBBB. This is a hard discount grocery retailer in Mexico exclusively. Hard discount is kind of like the no frills shopping sort of model. If you've ever been to an Aldi or a Lidl in Europe, I think Aldi's in the US a little bit. The
Both of them
closest
are.
and like the closest simile I would say is like grocery outlet bargain market. I think is a little bit more popular on the West Coast. But it's the idea, no frills, stuff's on pallets instead of on shelves. They try to keep operational costs low so they can keep prices low, and try to pass on as much savings to the customer as possible to get frequent customer attraction. It's a model that works. What's surprising to me is this is a business that was started by somebody who was like a private equity analyst for hard discount grocers in Turkey, the country. And like he did a white paper analysis. He's like, man, Mexico really needs one of these, and went down and built it. And it's been growing. He started, I think, in the mid 2000s, been growing it for 15 years. It just went public this year. And from an operational standpoint, this business is beautiful. So they deliberately keep shelf keeping units low. And they like are very meticulous on what they bring into the store, because they like plan out like how its customers are going to buy. It's like, well, we know they're going to come in 2 to 3 times a week because we are in neighborhoods where the primary shopper walks. So we have to like everything has to fit into like 2 paper bags, and they're going to come 2-3 times a week. It's like the level of detail in their investor prospectus goes down to this granular level of their customer. And I was like, you don't fake this. Like there's a lot of like corporate fluff that we see when we're reading prospectuses in management presentations, and I was like, you see stuff like this and you're like, you can't fake this. This guy cares a lot. It's Anthony Hatum, he's the CEO. And it shows. Like this is a business that's grown. It's about 2,600 total stores in Mexico right now. Same store sale growth for the past decade has been over 10%. So double digit same store sales comps for a grocery company is quite silly. Look, I know margins stink, but it's groceries. Of course, it's going to be a low margin business. The point is turnover. You want to turn over your assets a lot. And even though it's a low margin, you do it effectively. And a good grocer turns over inventory a lot. Over the past 12 months, BBB Foods turnover is 19 times. Let's do a comparison. Kroger, arguably one of the best like operators of a grocery store in North America, they have a inventory turnover of 14 to 15, depending on the quarter. So this is an excellent operational business. Like they really know what they're doing, and there is a spectacular growth possibility here. They went public to pay down some private level debt or private credit debt, which was pretty expensive, but also to grow this business. Like I said, 2,600 store footprint, but on the white paper analysis that they did in the prospectus, they think like the optimal size for BBB Foods or Tiendas BBB in Mexico is 20,000 stores. So you have a 7 to 10x store count growth on top of operational excellence in terms of same store sales growth. And you have what is typically a slow growth, modern, boring, mature business, which is groceries, that's growing like rocket fuel, relatively speaking. And it's a business that I want to be a part of. We've talked about in other videos. I think the Mexican economy is going to do incredibly well for the next several years because of friendshoring. A lot of kind of the mechanics of the Mexican economy look very robust right now. That means growing revenue, growing per capita GDP. It's businesses like this that I think are going to do incredibly well. And this has been one of the better operational success stories I've been reading in this market, and something I want to be involved with.
I want to thank The Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You all know how much I love researching new stocks and trying to find the next best investment. So I'm proud to partner with The Motley Fool to bring you 10 stock picks from the popular product Stock Advisor. Stock Advisor has beaten the market by nearly 5 times. So go to fool.com/Frankel to get your 10 stock picks now. The Motley Fool Stock Advisor returns are 767% as of July 5th, 2024, and are measured against the S&P 500 returns of 163% as of July 5th, 2024.